In the year 2020, 10 million new Robinhood day trading accounts were opened. That's mind-boggling. Should you be day trading? Time to think like an investor. Welcome back to the channel. If you're new here, my name is Josh, and if you're new here, you're not familiar yet with the fact that I'm really critical of day traders. Honestly, all these programs, all these people out there saying how much money they make day trading, I've been pretty critical of it. And I mean, okay, there's a difference between disliking day trading and disliking day traders, okay? I can hate your idea without hating you. Maybe I love you, okay? It's not like I dislike you or disapprove of what you're doing. I'm just thinking the activity or the belief system you have in your mind is flawed, okay? And today I want to talk about day trading and why I tend to be a little bit critical of it, okay? Especially as a financial advisor who helps clients manage their portfolios of investments, right? It's not like I'm in some foreign territory here. This is literally my backyard. So one thing I want to say, first and foremost, is some people would say, okay, what does he know? He's never done it before. He doesn't know how fun or lucrative or etc. I did day trading. Actually, it was called swing trading. I was trading for 3 years of my life, from the years 2013, 2014, and 2015. Essentially, the moment I graduated high school and started making an income in my job to 3 years out from that date, I was actively trading in the markets pretty much every work day. Some days not, but most work days that were the markets were open, I was in there day trading. But where did this all come from? Okay, so I was a young person just graduating high school, and I'm realizing, hey, I'm not really good at the whole like taking assignments thing. I'm really not good at taking orders, like being boss trying. It's not like I was some rebel. It's not like I was some bad, like crazy person. It was just, I thrive the best when I'm in control of my decisions, and I knew that if I wanted to have success in my career, it probably wasn't going to be through the way of having a boss or like a typical schedule. I needed to find a way to create an income stream outside of regular employment, whether that was investing or starting my own business or being an entrepreneur. And what is the best way to start flirting around with the markets and investing in business than to start day trading? And I think that's the reason there's so many new accounts being opened, is there's such low barrier to entry. You can open a day trading account for like zero amount of money. You can start with like $500, and from there, you can get yourself involved in the world of investing and get it's just so easy, and it's so enamoring, this whole thing. And that's exactly where I was at the age of 17, 18, 19, 20, in that age range. And I thought, this should be easy. Most people don't think about investing, so if I just think about investing and take a few courses and read a few books, I should be able to retire by 25. And like, I didn't actually think that was possible, but there was part of me that thought like this could happen for me really quickly. So I did do that. I started reading every single book I could on trading and investing, and I was taking online courses about trading in the stock market and currency markets and commodity markets. And you know what? I did learn quite a bit. I'm actually very satisfied with the amount that I learned. But what I was essentially doing was swing trading, which means trading from week to week. I would essentially have positions open for usually 5 to 10 days at a time instead of just daily. And what we were doing is we were following technical chart patterns. So I would open up a chart, a stock chart, like you've seen in the movies or whatever media you've seen, with these complex charts with all these lines all over them. And I was learning about all these different things, like moving averages on charts and relative strength index and market breadth and moving averages and convergence, divergence, all these technical terms traders use to plot on these charts that really kind of mean nothing. But all of that being said, I was doing this every single day. I'd wake up in the morning, I'd take a look at my charts, I'd place my trades, I would reassess them, around noon, and then again at market close. And I would do this day in, day out, reading all the research, doing every single thing that I could. And a lot of people might look at this and say, you know what, he was just kind of a naive trader. I should start trading because he just didn't know what he was doing, or the timing wasn't right. But I genuinely believe that I was in the same spin cycle that every young person is when they get a hold of this idea of day trading for the first time. And you know what? It wasn't all bad. Like, this is the thing, is it was this roller coaster of really good. And then actually, in all cases considered, the downside for me wasn't so bad. In terms of some of my biggest wins, a lot of people ask me like, oh, what's the best trade you've ever made? I was long a stock called ARCW, ARCW, in late 2013. And you can go look at the stock chart, I'll even put it right here. That thing absolutely exploded. And I remember coming home from like my minimum wage job and seeing that I had made $3,000 in one day as like an 18-year-old. And I was like, this is nuts. Like, I just made double almost what I make at work in a month one day trading. That was massive. And then there was another time in 2014, I was in the commodities and my trading patterns told me to short oil. So I shorted oil futures, and what happened over that course of the years, oil plummeted with some OPEC announcements, and I essentially watched as oil went down and down and down and down, and I made more and more money day after day through a series of weeks and even months. And what did I do? Well, I took all that money out, I sold everything, and I took a trip to Southeast Asia and just blew all the cash in like a month. Now, in terms of losses, one thing I'm super grateful that I learned, that if you are going to trade, you gotta take my advice on this at least. Trading is about managing risk. What you don't wanna do is blow yourself up in a way that actually can destroy your future, because that's possible. There was a tragic story earlier this year, sorry to get heavy and deep, where a Robinhood trader actually opened up his account with options where he had leveraged his account, and the losses were so big the next morning when he opened it up that he took his own life. Like, that's crazy. There are ways in the investing world with leverage and options that you can create a situation where you destroy your financial future. And this shouldn't be allowed for 18, 19-year-old kids who are just throwing money at different things. But for me, the one thing I'm grateful for and what I want you to take my advice on is the idea of risk management. I had gotten into a system that always set what was called stop losses. If your position went against you too far, it would automatically sell you out. And we would also have these situations where, we would only ever bet 1 to 2 or 3% of our entire portfolio on one trade. So that way, if you lose 10 trades in a row, you still have 90% of your money. And if a trade goes against you really fast, your stop loss gets you out. These are things I learned really young. So people ask me, like, what was the biggest loss you ever had? Well, I didn't really have any massive losses because I always got out with the stop loss, and if I had a loss, it was usually only at maximum 2 or 3% of the balance of my overall portfolio. In terms of the stock trading, that company ARKW, that did really well. I had certain trades that allowed me to travel the world. But when I look at this, I recall actually looking at my performance, and it wasn't like I had some detailed compounded return year by year, but I looked at, okay, how much money did I start with? And it was about $15,000 that I had saved up when I really started to trade quite a bit. And I turned it into about $23,000 through the course of 2013, 14, and 15. So what that meant was I had gained about $8,000 in value. And, over time I had withdrawn $2,000 for a trip, and I had withdrawn $2,000 for another trip, or whatever it might have been. But all that being said, $8,000 on $15,000, that's about 55%. And if I looked at the compound annual return of the S&P 500, just the overall stock market through 13, 14, 15, it's the exact same. So essentially what I did is I spent about 100 times the time, maybe 1,000 times the time, to get the same return as somebody who just bought an index fund. This is what trading culminates in. It culminates in a lot of lessons learned, a lot of roller coaster rides, and essentially getting the same return that the market would get you on average. And this is where I had to take a humble look at myself and say, I might not be Warren Buffett or a hedge fund manager after all. Maybe there really is something to this wisdom of long-term investing and trying to actually build wealth over time instead of just placing these minute little trades. Now, one thing you will learn, as I learned very quickly, is that there is no such thing as the perfect trade. This is kind of like lesson 1. I had a client recently who, and I'm not gonna get these numbers exactly right, but they bought into Tesla many years back, and Tesla went on an absolute run. This actually happened to a few clients in Tesla stock. The stock went on a big run, and now they're at the point where it's like, okay, do I sell? Because I've made, 100% on my investment. Like, that's amazing, I've doubled my money. Do I get out, or is this gonna keep going up? And I would field texts and calls from them like, hey, should I get out of this? Should I hold on? And at the end of the day, they decided, okay, I'll let it go up a little more and then I sell it. And a lot of these guys, sold it at about 100% gain or 150% gain. And usually in the market, that's fantastic. You doubled your money, that's incredible. But what happened after the fact is that Tesla doubled again, and it doubled again, and it doubled again. And even though they had gotten out of that investment with a massive gain, they're still kicking themselves for the money they made because they could have made more. This happens all the time in the world of trading and investing, where you want the trade to be perfect, but you can never perfectly pick a top and perfectly pick a bottom. The velocity that money comes into your life is the same velocity at which it goes out. So for instance, if I grind day in and day out in a really hard labor job to make my $40,000, $50,000 a year, it's almost guaranteed that I'm going to save that money, I'm going to be frugal with my decision making, and I'm going to make good financial decisions. If I make a trade on Tesla stock where I make $3,000 in a day, that money's going to leave my account in one day. And what I mean by that is, when you don't work to earn the money and the money comes really fast and easily, what ends up happening is you end up spending it. You go out for drinks and you spend $500, you go on vacation for $2,000, whatever it might be. You go on a shopping spree because the money came in. It's like bonus to you. Your mind just says, oh, that's bonus money. I can spend it on whatever my heart pleases. And lastly, investments solve problems, but trades create problems. You know, when you invest money, you can accumulate capital over time, whether it's in real estate or a business, and it will pay you out on a yearly basis so that you can cover the costs of your life. When, you know, that's a problem solver. There's future suffering or future labor that's gonna be gone because of your investment decision. That's different from trading, which is this quick in and out of the market, in and out of the market. And the reason that creates problems is, well, first of all, it creates fees, it creates taxes and commissions and all these things that eat away at your performance. And then it also creates issues in that you get into a trade, and like my clients, when do you decide to get out? Now you have more problems. You think you're solving a problem by making yourself more money. And even if you do nail the trade, you come out and now you're in the exact same problem. I need to find another trade, but now I have more money. So anyways, guys, these are some of the lessons that I really took to heart in my experience day trading through a 3-year period. And it was a lot. And what I found at the end of the day is my performance was relatively, close. It was almost exactly what the overall stock market had gotten. Had I just put my money in an index fund, I would have been in this exact same position and freed up maybe 1,000 hours of time. So anyways, that's my lesson for today. I hope if you've begun day trading, you'll maybe take some of those lessons to heart and think that over a little bit. But anyways, guys, thank you so much for getting any value out of these videos whatsoever. Make sure to hit that like button below and hit subscribe. And also turn on post notifications for more videos just like this one every single week. Until next time.